So, when talking about the daily bias, the main question we are asking ourselves is where is price likely to expand to next? And this is going to act as our draw on liquidity or our target for that day or that session. So, how do we find this? Well, to understand where price is likely to expand to, we need to understand how price actually works. How does it go from place to place? And when looking for daily bias, when looking for higher time frame bias, you are looking for a clear run from one of these four things: from liquidity to liquidity, from liquidity to an inefficiency, from an inefficiency to liquidity, or an inefficiency to an inefficiency. So what is liquidity, right? Liquidity is simply highs and lows. So either old highs, old lows, swing highs, swing lows, open high, low close, that can all be liquidity as well. And you also have relative equal highs and relative equal lows. So bunches of lows that are bundled up at relatively the same level. Stops are going to be resting above this level. So price is going to want to seek those levels in order to stop out profitable positions or grab liquidity for their own positions. So that is liquidity. Now, what are inefficiencies? Inefficiencies are simply areas in price where it has delivered inefficiently. So we had a big move up or a big move down and price left gaps. The main ones I use are fair value gaps, order blocks, and equilibrium, which is basically just discount and premium and the 50% level. You can also use inverted fair value gaps. I'll use these whenever they're relevant. Breaker blocks as well. And then you have volume imbalances and liquidity voids. So these are basically all the ICT inefficiency PD arrays. And then these are all of the types of liquidity that you can find as well. So you want to be paying attention to those, and that will reveal to you where price is likely to go next. Let's go ahead and look at some rough examples of this. We're going to hop on the charts after this to see some real examples, but this is just so you can understand the different types of liquidity draws. So liquidity to liquidity. As we covered before, price is either doing one of these four things. You see that price dipped into sell side liquidity resting down here, and then immediately ran for buy side liquidity up here. So that would be an example of liquidity to liquidity. Maybe this was an old low. Maybe this was a swing high from all the way back here, and we decided to sweep this low and then take out that high. So that's liquidity to liquidity. Next, we have liquidity to inefficiency. So you'll notice here, price came down. As it was coming down, it left a bearish fair value gap, and then we swept sell side liquidity down here, and we traded back up into this bearish fair value gap. So that's an example of liquidity to inefficiency. And then inefficiency to liquidity, price traded up into this inefficiency, this bearish fair value gap, and then came down to target the nearest low. So this liquidity resting below there. And then we have inefficiency to inefficiency. Price came down into sell side liquidity, displaced, made an inefficiency here, bullish fair value gap, and we send price all the way up into this bearish fair value gap right here. So we're kind of trading in between two inefficiencies. And now that you understand all four ways that price likes to move between liquidity and inefficiencies, let's hop on the charts and look at some examples of this playing out in actual price. All right, so we've got the NQ chart open. As you can see here, this is the daily candle. We are bullish and we closed above these highs over here. We also displaced above a bearish fair value gap, and we have some nice highs chilling above here. So we have these highs here, and then we also have a weekly high or a swing high. So a very strong draw on liquidity expected at that level. So let's see how price plays out. So you can see we had a bullish bias. We closed above. We were targeting this level and then this level, and price hit both of those levels. So this is an example of price moving towards liquidity. And if you also factor in the opening price of this day's candle, we also swept the opening price. which is liquidity, and we swept these levels of liquidity, making this a liquidity to liquidity scenario. Now, on the lower time frames, the intraday time frames, there were probably fair value gaps, other inefficiencies you could have used to catch a trade up into this level. We'll get more into that later, but that is a great liquidity to liquidity example. And now that we're at liquidity again, we are either going to move from this liquidity to another level of liquidity or liquidity to an inefficiency. So one thing that I'm noticing right here, we took the swing high on the weekly and we also left this fair value gap down here. So we also have a fair value gap down below. And if you pay attention to the most recent price leg as well, we also have displacement. So we've also created this nice displacement leg, and eventually, maybe not now, but eventually we're going to want to reach for a discount because we took a higher time frame level, the weekly high, and now we're either likely to consolidate or start to retrace back to a discount before trying to find a new high or before going lower. So let's go ahead and see. Let's play out the next couple of days. Boom. So we create an indecision candle, and we also created another bullish fair value gap under this low here. So my bias at this point is going to be bearish because I think we're going to drop down into this fair value gap. And if we can get past this one, we can also see it drop down into this fair value gap as well. So let's see if that happens here. So we get another bearish candle, a very small one, but still a bearish candle. We get a little bit lower into this fair value gap. And remember, all this time you could be taking sells because we're still expanding down. We're still closing bearish. So there's still opportunities. It's just a lot shorter of a range to trade within. And that's pretty typical whenever you encounter a weekly high or whenever you trade to a weekly level. The daily and the intraday is likely to have some sort of short-term consolidation. So candles start to form down. Let's see if we're still bearish. Still holding bearish, and boom, we finally get the drop into this fair value gap. So this whole time I would have been bearish since taking this weekly high. Now discount is a little higher because we stabbed above it just a tad. So let's continue playing this out, see if we can actually reach for a discount here. You see right away we reach for a discount. So this is a great example of price going from liquidity to inefficiency. All this time from here to all the way to this candle, we're moving from this liquidity level all the way into all of these inefficiencies. So you're starting to understand how this works. Another thing that you can do, and this is something that I use a lot, is you can use the weekly levels to help you with your daily bias. So if we look right here, we have a weekly order block that is forming right here. And if we go ahead and use the Fibonacci, we can also find the midpoint or the mean threshold of that order block as well. So let's go ahead and mark out these two levels and then go back to the daily time frame to see how they line up. You guys are going to be super surprised if you've never done this because this is a great way to get some extra confluence behind your daily bias. So I always refer to the weekly time frame as well. So as you can see, price traded down into this weekly order block as well as this fair value gap. This fair value gap is inverted now, so we're no longer going to pay attention to that, and we're also at a discount level in price. Now, if you look real closely, you can also see that we have left a volume imbalance over here. So we actually have this volume imbalance that price had left behind way back here, but you're going to see price is respecting this volume imbalance very well, and it's also in alignment with the weekly order block. So you're going to see that the more layers you have, the more inefficiencies that are stacked together, the stronger price is going to respond. So at this point, we have a discount area, we have a volume imbalance, which is bullish. We also have a weekly order block, which is bullish. So at this point, I am extremely bullish. So let's see what plays out. And boom, you can see very good respect from that volume imbalance, continuing to push up and support price. And you can see we also created a bearish daily fair value gap as well. So after this candle closed, we left a daily bearish fair value gap. So at this point, I'm still bullish because we're still in a discount. We're still respecting these levels. And I'm thinking this can at least reach for the midpoint of this fair value gap. And if it gets past that, it can probably reach up into this fair value gap as well. So let's go ahead and see this. But you can see here again, this is an example of price moving from an inefficiency to an inefficiency. And watch what happens here after we touch that volume imbalance. Boom, we go right into this inefficiency. So we basically went from liquidity to liquidity, liquidity to inefficiencies down here, these fair value gaps. And then we went from this fair value gap and this volume imbalance, inefficiency to inefficiency again. Now at this point, I am going to delete this because the chart's getting a little crowded. I'm also going to delete this fair value gap because we have this one supporting us down here along with the order block. And I'm going to mainly pay attention to these two fair value gaps and this new high that we ended up creating up here. So this is now the official all-time high. And since we're bullish, I'm thinking if we can get past these two levels, we can eventually see this as a longer term draw on liquidity. So let's see what price does. I'm still bullish up until the midpoint of this fair value gap. So you see, we do expand initially bullish to this gap, but we have now closed bearish. So you can see price respected that level very well. It actually went back and touched the volume imbalance again. So we just went from inefficiency to inefficiency once again. And on this particular day, I would probably be bearish for the next day simply because we respected this, but I would also rely on my intraday charts, my 1 hour, 15 minute, 4 hour charts very strongly to determine the actual bias, because a lot of times when we're stuck between two inefficiencies, we tend to just consolidate. So let's play out what happened next. So you can see we actually closed bullish this day. So instead of going bearish like it initially looked like, we actually wicked down and decided to close up. So it's very important to be flexible with the bias as well. So at this point, we've engulfed this candle. We've also traded and wicked above the consequent encroachment. And it looks like we're going to have a tendency to continue to price higher through this fair value gap. So let's see if that's the case. At this point, I am bullish. And as you can see, we continue bullish. And we continue bullish all the way until this upper gap right here. And we start to see a little bit of bearishness. Now, at this point, this fair value gap is looking very weak, but it still hasn't been closed above yet. So we still have to see it close above that level. And again, this is one of those times where you're likely going to be relying on your 4 hour, on your 1 hour, and on your intraday charts to determine bias. So in terms of what the next bias is after this candle, we could say it's more likely to be bearish, but honestly, it's pretty close to 50-50 if you're just looking at the daily time frame. So let's see how it plays out. And you can see we end up going bullish on this day into this fair value gap once again. We're going to be drawing more towards these highs up here and then this ultimate high up here. And we also swept the low down here on the daily time frame. And more consolidation you can see, and we finally leave that consolidation. So it's important to notice here, as soon as we close above this gap, it becomes an inverted fair value gap. And you can see price is still following all four of those models because now it's simply moving between these two inefficiencies, the fair value gap and the inverted fair value gap down below. It finally gives displacement, and now we're probably headed bullish for this high up here. So let's see it. We end up taking that high. So hopefully this is starting to make a lot of sense. Price went from liquidity to our high over here, which is liquidity. After we swept this high, we went from liquidity to an efficiency, this fair value gap down here, this bullish fair value gap that we had marked out earlier. And then we went from inefficiency to inefficiency, this fair value gap, inefficiency to inefficiency again all through here. This was also consolidation. And then after we saw the displacement past this fair value gap, we went from inefficiency to liquidity once again. Price is always playing a game of ping pong in between these levels, and it's just about finding the most obvious one. Now, on days where there is no clear higher time frame bias, so like these days here, for example, what you have to do is simply drop down into the lower time frame charts. So dropping down into the 4 hour. I usually trade New York session, so on this day I would be arriving at the charts around 10 a.m. So let's see what was happening around there. So we can see here the 10 a.m. candle. We also have the 1 hour chart, and then we also have the 15-minute chart. On this day, we were very bearish from the intraday perspective. So if the daily wasn't fully clear before, you now have a much clearer idea of what this day could potentially offer. We have a bearish 15-minute fair value gap here that could possibly be used. We have another bearish level up here. We have this order block on the 15-minute time frame. So we have a lot of bearish order flow happening in price currently. So that's also how you can determine bias on the days where it's a little less clear on these higher time frames. So that is exactly how to determine daily bias. If you have any questions about this, feel free to drop them in the comments below, and also let me know if you have any other ideas of videos that I should make. Make sure to also subscribe to the channel, and until next time, be blessed, and I will see you in the next one.